There's different ways that you can do it. Obviously, the first one is your website. You've got to invest into that and make sure that it's current and it's right up there with what's happening. I guess the garden itself is made up of not just the website, but a whole lot of things. And I break it into low-hanging fruit and the rest. The low-hanging fruit are things like, the first thing is referrals. You should be getting your clients referring you more clients or referring you their friends, because that's the greatest accolade, if you like, for doing a great job, and that doesn't cost anything. So if you do a great job and you get a happy client, the happy client goes out and refers a friend to you, not only are you going to keep that happy client and he's going to pay you really quickly and not argue about the fee, but he's going to refer you a friend that costs you nothing. It's in everyone's interest to make sure that giving a really good service so that you're getting lots of referrals. And I've talked about this many times, but the biggest mistake that people make in terms of running their practice or their business is to finish the work and just send it off to the client without any discussion. They just get it in an email, they sign the tax return and they send it back. And that's being efficient, but it's not being effective. And being effective is the people contact, calling the client up, taking them through a journey of what you did. And if it's a large client, always have this client approval meeting, and we do tax planning in that meeting, despite the fact that most of us already know how to finish it off. And if you're efficient, you'll go and finish it off and send it out. But if you're being effective, spend 10 minutes, 15 minutes, 20 minutes talking to the client, taking them through the journey of what you're going to do. And that's a larger client. And often I'd bring them into a meeting and I'd take them through this journey of what I was going to do to finish it off, or I'd ask them questions around tax planning. And then if it's a small client, like an individual client, I'd just ring them up and explain to them the results and explain to them what was done and so forth. And that used to really get me a lot of referrals. But the effort to do that was 20%, because 80% of the effort was actually getting the work done. But the last 20% of that effort, which often might take 10 minutes or 15 minutes, if it's a meeting, it could take up to an hour for the larger clients. But that last 20% effort gave me all the referrals. So that produced all the outcome for me. And the outcome for me is not finishing the work. The outcome for me, my definition of outcome, is that client referring me a friend. That's the outcome. That's the end result. So if you're looking at what is the end result is the client's really happy, so happy that they'll refer you friends. But if you don't do that last 20%, you won't get that referral. And often I did that instinctively for some reason, but you need to encourage the staff to do that. I see client managers not doing that. They're just finishing the work and sending it out, and they don't go that extra 20%, and they won't get any referrals. So that's the very first one. The second one is you need to sell more services to your existing clients. You've got a gold mine in your database. The research shows that the clients are crying out for more services. There's surveys and surveys that have been done over and over. The clients are always saying that they wish their accountants would provide them more services, and we're not doing it, including ourselves. I call that a monetization sheet. So you should get a big spreadsheet, put your client's name on the left-hand side, and going from left to right, putting down all your services, and then ticking them off as your clients are taking up those services. You could easily double your turnover if you provided more services to your existing clients. They're the two lowest hanging fruit. So they're the two things that you should be doing, because it doesn't cost anything to do that. In fact, it's a detriment to your business if you're not selling more services, because the clients currently are asking for it. And then the last two is, which will cost money, or I call it an investment, is the marketing, the digital marketing. You need your website, SEO, the search engine optimization, your newsletters, your webinars, your blogs, those kind of things. And that requires an investment. We'll talk more about that today. And then the last one is acquisitions. It's very profitable to acquire a firm. And if you look at the typical key performance indicators, generally, if your cost of goods sold runs at about 40%, your overheads at 35%, then your EBITDA will be a minimum of 25%. And that includes the owner's salary. So I'm talking about an EBITDA after the owner's salaries. So as a pure return on your capital, you should be doing around 25% or more. So that's a typical firm. But when you do an acquisition, acquisition, your cost of goods sold isn't at 40%. It's, maybe 20% or 30%. It could be zero if you've got excess capacity in your own firm because you're using your staff to do the work that you already have, and you're not having to go out and hire any new staff. But let's just be conservative. Instead of being, say, 40%, it's 30%. Your fixed overheads much, much lower. Instead of being 35%, it could be at 5% or 10%. So your profit, your EBITDA is not at 25% on a tuck-in or an acquisition. It's around 60 to 65%. And if you're borrowing money at around 4 or 5%, and I know the interest rates are going up, but even if it's at 5% and you're netting around 65%, you can see it's a very lucrative activity to pursue. That's probably why the demand is so much greater than the supply. Certainly in Australia, there's very few, when the firms come up for sale, they get bought very, very quickly, and the prices have gone up because of that. Just a quick summary, that there are 4 things that you should be doing to build a garden that attracts butterflies, and it requires an investment. It requires a team of people to run that, and that requires an investment. And I often use this statistic that you should be investing around 5% of your turnover in marketing activities, and you've got to see it as an investment.
That's a really great point you're honing in on there, Ed. It's really important for us to be able to at least take advantage of our low-hanging fruit first before going out there into the wide ocean.